Welcome, everybody. This is Nico, your host for the Trading Daddies podcast, and my co-host,
DJ TJ in the mix.
TJ in the hut. On today's episode, we talked about how we got spanked again, more Tupperware news, and what else, dude?
Oil. Short
Oil. Trash oil.
Yeah.
Oil is bad. Well, not bad, but you know what I mean?
In this episode, we spoke about how earnings have surprised us.
Surprised us and, just took a lot of money from us. But that's, you'll hear more of that in this coming episode. Just to remind you guys, please give us a thumbs up. Give us a like on the videos. These videos do take some time and it really helps with the algorithm. Comments down below. Follow us on Instagram. Hit the subscribe button on YouTube. Post notifications so you guys are notified each and every single time. TradingDaddies.com for all your information, all the information that you guys want from us. And yeah, let's get to the episode. Surprise! We said we weren't going to do an episode this midweek, but you know what? Here we are. We felt that we owed it to you guys to give you a pod. Again, your host here, Nico Riz, and my awesome co-host,
DJ TJ in the mix.
DJ TJ in the hut. You know what I mean?
What up, bro?
I'm just gonna come out the gate with it. This week has been total butt.
This week, the past 3 weeks, this month, this year,
Spooktober is definitely a thing.
So look at it this way. We're gonna look at it for next year. Well, Spooktober is always every year. I mean, 4 years from now, we're gonna know what to do exactly. A week before the elections, it gets really choppy. Volatility is on the rise. If you guys follow the VIX, it's at what, 30,
37, 32, 37, somewhere around there.
Anything above 30 could really, it's like, you're in red waters already. So
exactly. You know what I'm going to do? I'm going to close out all my positions, right, and just start playing the volatility indexes. At this point, anything could work.
Yeah. In all honesty, yeah, this week sucked. Let's talk about what happened. Let's talk about, then we had like a 4-day losing streak.
I think we're having a 3-week losing streak.
Because anything that we touch actually rolls over.
Like Midas, like you have the Midas touch, right? We don't have the Midas touch. We have the Necromancer's touch.
Yeah.
Everything we touch has been dead. But my saving grace, though, however, my the only thing that's really positive about this whole scenario is Neo hit my strike price.
Yep.
Neo hit stroke price, and we're at what $30 was my stroke price, and we got some pretty solid returns on that. And my expiration is not till January, so I'm holding on to my calls.
Yeah,
it's just expect it to be really bad for the next 3 weeks.
Well, I wouldn't say so. Look at it this way, okay. I'm not praising whoever's in office, but. We all have differences and similarities, but 4 years ago when Donald Trump was elected,
Donald Pump,
that night, November 3rd, November 4th, whatever, when they announced it, the market took a huge dip. I think it was like 4 or 5% overnight. And then futures recovered the following day, like nothing happened. Okay. And we might see the same exact scenario here. I'm not voting on like anything to happen, but who knows? It might happen again. It might not. But the last 4 years in every election, okay, there's been a classic bull run. Mm-hmm. And I'm not going to say, it might happen or it might not, but every time someone is elected, they're always going to throw out new policies, and that's when it creates that bull run. So what we saw today was a complete, shit show of earnings. Well, in the past 2 weeks alone, earnings haven't been really spectacular. Like if you look at Apple, Facebook, Amazon, Twitter, well, except for Google brand,
Google brand.
Starbucks. You look at eBay. You look at all these companies. AMD. AMD announced that they bought out, a company, and
Xilinx.
They still took a crap.
Yeah, even Activision beat.
Yep, like all these companies were beating expectations, EPS, revenue, and they took a crap. So what does that say? That says that market sentiment right now is bearish going into the elections. Okay. And I was just talking to my friend about it, a few hours ago. He said, like, isn't the stock market connected to the economy? Like, if the economy is doing well, shouldn't the stock market do well as well?
No, I don't think so.
And in realization, it's going to take a while for an investor or a trader to realize that they're not connected whatsoever. And it took me a while too. Okay. And this is just my plain opinion, the moment that I found out that they weren't connected at all was during this pandemic. Okay. Yes, the market crashed back in March. Okay. And then when the lockdowns happened, stocks were running. Right? All the tech companies were running, and we're like, what the heck? The economy's supposed to be bad, right? Aren't everything supposed to be taking a dump? No, a lot of companies actually thrived over this pandemic. So it just tells us that, the economy and the stock market has no connection whatsoever.
Totally different.
To me, and correct me if I'm wrong on this, to me, the stock market is all about perception. Okay. Me as a trader or an investor, I look at Apple, for example, as a company. Okay. Am I bearish or am I bullish? Do I believe in the company or do I not believe in the company? Okay. So my perception is what drives the stock price. Plain and simple. And people don't understand this when they say, oh, stocks only go up. Yes, they do. If you look at historically 10, 20 years ago, it was probably like 30 times smaller, whatever. I'm just making that up. But if you do look at it, 10, 20 years ago, yes, you're going to say that stocks do go up.
Yeah.
But if you look at them short term, no, they don't. No, they don't.
So my take on that statement is I believe you. I do believe that the market and the economy are two separate things. And the way that I've seen it is the market, what we do is influenced by buyers and sellers.
Yeah.
It's a market.
Yeah.
It's a market, right? So there's different factors that definitely take into play. So you have current events, you have news, right? Current events, news, you have market sentiment. All these factors tend to play with your psyche, right? So as a trader, right, our job is to ride trends and to find the trends. The thing that really is the thing that sucks in reality for us is as retail traders, we're small money.
Yeah.
That is the truth. We're small money. The reason why, like, for example, let's take Apple, right? Apple beat good revenue, right? But what caused the stock to go down is because a lot of people started jumping the ship, right? So what happens is when there's more supply, the price goes down. It's just simple economics at that point.
Yeah.
And I mean, everybody tries to tie down the market to a certain metrics like GDP, unemployment, job growth. These are things that influence traders to actually invest.
Yeah.
It doesn't matter, right? It doesn't matter whether or not our GDP is at an all-time high and we're better at everybody else's. I mean, it could definitely take into effect, right? It could cause me to say, oh, snap, I might want to buy a certain sector because this sector is poised for good gains. But again, The reason why these gains are happening is because people are also piling the money into that stock. So we're not selling the commodities. It's like, for example, oil, right? You're not buying the oil. You're buying the company that sells the oil and what the company does. You're buying the shares of that stock. So it's what your belief systems are for a certain company that really does influence the market. And when I say small money, there's hedge funds out there that are dropping millions and millions and millions of positions that you don't see. Like you look at your data, you look at time of sales and all that cool stuff. But at the end of the day, our job is to pick up the crumbs and find a way to make money off of that.
Yeah.
Right. And that's what we're here for. I mean, we're not financial advisors. We don't have that kind of pull. We're not gurus by any means. But you know what? What made today a lot better is we had that Discord, chat room and everybody was talking in there and, just throwing jokes and trying to make light of a situation. God damn it, it was bad. So that's my take on the economy is tied down to the market. It's here and there, dude.
So we're going to talk about what happened with earnings this week. Okay, well, especially let's jump the gun and talk about what happened today alone.
So what happens with earnings is I didn't earn anything.
Well, these companies were earning.
The companies were earning, but everybody was dumping their positions. I mean, I get it. It is what it is.
Yeah. So let's talk about the big five. We're going to start off with Apple. Apple had a rally today. Well, the market had a rally today because of the news that the GDP was up 30-something%, meaning that, the economy is like on a kickback. It's doing well again. Who knows? Who knows what's going to happen next week when the election comes in, right?
But it was a beautiful run today.
Huh?
It was a beautiful run today.
It was. And then until earnings happened, until, when the market closed, first one we saw was actually Google. Google ran about 10%, even though they're in this whole allegations of the whole antitrust thing. Google pretty much just said, F all of you guys.
Right. I mean, again, I'm going to make that point. Like nobody says like, hey, John, what's the price on this? I mean, go Bing it. Go Yahoo that.
I'm actually going to start using Google for advertisements. I was looking into Yelp as well. Yelp, I'm bearish on Yelp. First of all, Yelp is like they nickel and dime you on everything. Like if you want to put up your business name on Yelp, it's like $1 a day. So
you know do for $1 a day.
My name tomorrow. Can I skip the $1 tomorrow? But
right, exactly.
Saturday.
Yeah. We know what you could do for $1 a day.
What?
Feed this hungry child.
Be on that commercial.
In the arms of an angel.
I still have disclaimer. I still have a position in Apple. I still have 150 shares. They did took a dump after hours, so they were running nice. They hit what 117. I think they they hit 116.93. And then after hours, they kind of took a dump by 5%. They beat revenue. They beat EPS. However, Apple is saying that this is the biggest September that they've ever had. But market sentiment, everyone still sold their share. Mm-hmm. Either it's profit taking or they don't believe in Q4, even though they're already profitable.
Which is very odd, right? This tells me a lot about what investors are looking at, really, because we're coming into the holidays.
Yeah.
We're coming into the holidays. So if investors are bearish during the holidays for retail, it's not looking good, guys. It's not looking good.
I'm still, optimistic when it comes after next week, how the market's going to react. I'm still like positive and optimistic that there will be a bull run of some sort. If you have a long-term portfolio, yes, you want to position your chips correctly, right? Pick the right sectors. Pick the ones that you actually believe in. Pick the ones that you already are invested in. Don't try to gun ho and be like, oh, I'm just going to put my money on Black 20 or something.
No, unless it's Black 17.
Black 17 and Black 20 is my number.
That's the proven number.
So is second 12.
Second 12. Second 12 is actually nice.
Yeah.
Second 12.
And if I want to hedge my bet, I'll do 23 and 32.
23. Yeah. Second 12. You know what? I love second 12. I like second 12, just the fours. Just the fours. Just the lanes. I like that.
We're such degenerates. Facebook actually showed some life. Somewhat. They beat EPS and they beat revenue, even though the stock ran all the way to 298.
298. And it didn't go.
273. And here's what I don't understand, okay? Because I own Facebook myself, okay? I'm bullish on it. I've been harping on it for the past, month and a half now. Ever since 268. It's been on a roller coaster. It hit 285, or 283 a bunch of times. And it hit 298 after hours, even though it took a dump and people were selling their shares. The boycott back in July
definitely helped. It hurt. Hurt.
It did hurt them because a lot of companies, major companies, we're talking about like Nike, Denny's, Microsoft, you name it. All these major companies kind of like pulled away or minimized their ads. When it comes to Facebook's, ad revenue, they pulled out on that one. The reason being is that they had some differences and they just didn't agree with, Facebook's policies at that time. That's why they were in trouble. Twitter. So the folks who were in Twitter, super rather disappointing, I would say. Because we saw Pinterest brand, we saw Snap
brand,
and Twitter did not follow.
Twitter dumped.
Twitter actually dumped.
Twitter dumped
at 47 right now, I think.
Yep.
No, 43. I'm sorry. I think it took a dump by 15% after hours. So here's what I don't understand. So, yes, they had some bad earnings, and the market reacted, the way it's supposed to be.
Yeah.
And lesson learned for our listeners, our viewers, when it comes to earnings, in all honesty, it's was it Ricky who said it's a three-sided coin?
Is it Ali? Yeah, it was Ali who said it was a three-sided coin.
Shout out to Ali and Ricky. You get a shout out too for being 3 out of 13 for earnings. Yes, it's a two-sided coin. It's really a 50-50%, chance of you winning, right? In all honesty, if you're bullish at something, just have a backup plan.
Yeah.
Hedge your positions.
It's earnings. Playing earnings on the day of is definitely a degenerate move.
It is. It's that
it's like an extremely degenerate move, and you shouldn't be doing it, right? Yeah. So as a smarter trader, as a smarter investor, the idea is to play the run up to the earnings and then the reaction afterwards. Don't play the earnings call itself. It's just the reason why people do it. The reason I do it is because, YOLO, right?
It's a DJ.
I shouldn't be. That makes me a very bad trader. It makes me a bad investor for YOLOing all the time.
Yeah.
And I can attribute, a lot of my losses because of YOLOing. So it's about having a plan and making sure that you stick to that plan. Let me turn this off.
The hard part of going into earnings, you really don't know what to expect. Okay.
Exactly.
Because Facebook, for example, all right, today what happened? They reported, great earnings, and the shares still took a dump. Okay.
Mm-hmm.
Apple beat on EPS revenue, but no guidance. They took a dump.
Mm-hmm.
Right. Twitter, they didn't do so well. They took a dump. So guess what? If a company does well, there's still a good chance that they're going to take a dump.
Exactly.
Yeah.
Exactly.
So hey, if you hit the short side on some of these, great.
Mm-hmm.
And like for example, Snapchat, past couple weeks, I was short on Snapchat, right?
Mm-hmm.
And I lost, a good chunk of position on that one. The reason being is that I didn't believe in it, and it ran. Okay, they killed it. It ran. The following day, it still ran. Actually, it still ran the third day. Okay, Pinterest. A lot of folks didn't believe in Pinterest. It still ran.
I'm a believer in Pinterest after last quarter. I
Yeah.
just I couldn't plug the play yesterday because I was driving home. I was running an errand and I was on the freeway and I'm trying to trade on my phone.
Oh, do not trade and drive.
Do not trade and drive.
Do not
So I
trade
said,
and
you know
drive.
what? I'm not going to touch this anymore. I'm out.
Yeah, trading and driving do not mix.
It's like draking and driving. Remember
No,
a couple
trading
weeks
and
ago?
driving. Do
No,
not.
draking and driving too. You don't do that. How about you don't drake and trade?
That too. You don't drink
Yeah.
and trade.
You never listen to Marvin's Room while trading.
Oh God. All the motions. But yeah, so enough with earnings. We still,
One thing about earnings though, shout out to Crocs.
Crocs killed it. All them believers.
Bro, I call that easy. I call that Crocs is the real thing, dude. Crocs is the real thing.
They killed it.
They did. They did.
And you know what? I totally forgot. You know who else killed it? It's Tupperware.
Tupperware.
They were so famous back in the 90s.
Oh yeah.
Everyone was on that pyramid scheme. Oh, I'm going to sell you, plastic container.
Exactly. You know why it's a pyramid scheme? Because if you unstack it, it forms a pyramid.
But check this out, though. Some numbers. Back in March, if you'd had invested $1,000 at Tupperware, who would have thought, right? Who would have thought in March or April that you would invest in Tupperware? Oh,
yeah.
The economy and the market's taking a dump right now. I just forgot I had to put my money in Tupperware.
Yeah. You know what? I would have invested in Country Crock because after you're done with that tub of lard, you could use it for Tupperware.
A lot of Filipinos do that. I actually have some in my pantry right now. But going back to Tupperware, if you had invested $1,000 in Tupperware back in March or April, 7 months from now, you would be walking away with 30,000.
30 bands? Damn.
That's how much they ran.
Damn.
Tupperware. That's the title of this episode. Tupperware. Are you serious? Tupperware?
Dude, I don't use Tupperware.
Come on, man.
I don't use Tupperware.
I'm over here investing in Facebook and Apple and, Disney.
All we did was Tupperware.
Come on, man. Tupperware ran 29 times from back in March.
You know why Tupperware ran?
Why? Tell me.
Because, all right, so I'm a Pyrex guy, right? I like Pyrex. It's easier to clean. The issue that I have with Tupperware, and the reason why the stock ran up, because there's Tupperware you need to keep buying.
That's true.
Have you ever tried to store spaghetti in Tupperware? Like I'm weird like that. Like if I see remnants of food, like even the color, it's stuck on the Tupperware, I'm throwing it away. Yep. It's not my thing. Like I'm not gonna do it. Right?
You got it.
And Tupperware sometimes has a smell that you just can't get rid of. So the reason why Tupperware ran is because you have to constantly keep buying Tupperware.
I don't. That's just my rant for the day. These companies, all right. These companies. I mean, everyone's heard of Tupperware, but all right, we're gonna be over with Tupperware a little bit. But what I don't understand is that Facebook and Apple and even Tesla, all right, they didn't do so well. They didn't do so well in earnings, and here yet you have Tupperware who ran 29 times.
The reason why is because of expectations.
So a lot of people were expecting, like they have a high bar of expectations when it comes to Apple, and Facebook.
It's too high. It's too high. I mean, no matter how much you believe in a company, the expectations for these companies are just to blow everything out of the water. And if they're not even subpar results. Don't get me wrong. They did blow everything out the water. They did really well for their earnings reports. But because we put these companies on a pedestal, right? Other investors are like, they didn't do that well. I'm gonna dump my shares. You know what I mean? So it's all perception, and we really need to be more mindful and understand that playing these earnings are definitely a gamble. So and in a worse time too.
Yeah, that's nothing for today.
Yeah. In a worst week, coming into election season too.
Yeah.
It's even worse of a gamble.
Yeah.
So I mean, if you guys bought naked calls, naked puts on companies, I mean, I'm sorry, kiss them goodbye. I'm kissing a lot goodbye tomorrow for sure, right? I might just sell at a loss and hold on to whatever cash that I have, so that once I'm ready to make the plays after the volatility goes down, that's pretty much where I'm going. But we know what we did miss though.
What?
We got caught up in the whole run up this morning that we forgot the shorts for tomorrow. Exxon.
Speaking of Exxon, they released some news that they're cutting global workforce by 15%. That's huge. They're slashing a lot of labor. That's including about, I think, 1,900, 2,000 jobs in the U.S. alone.
Yeah.
I don't know. I'm not a firm believer of oil.
Mm-mm.
Yeah.
Chevron tomorrow too.
Yeah.
Under Armour. I think tomorrow is going to be the day of a lot of shorts, and I'm expecting to do a lot of soul searching right when I wake up.
Yeah, tomorrow actually doesn't look good already, because if you're looking at futures right now, tech is leading the way. It's deep red right now.
Definitely.
It's like -1.25. So expect I wouldn't be surprised if it was a red day tomorrow.
For sure.
Especially
and I think we're at that stage of the volatility where we are in a bear market. We have to admit that. We are in a bear market. We will see these days that are just like super bullish, but expect it to dump the next day, because people are just traders are just trying to find value and try to scrounge up as much coin as they can for whatever reason. And like, if you're not holding on to certain positions long term, right? If you're actually investing and not actually trading, be prepared to make the moves so that you can, make sure that you have enough capital for the next play. Yeah. It's starting to get to the nitty gritty, and we need to be more. We need to pay more attention and be better at discipline. And I'm talking to myself, by the way. Be more disciplined when it comes to the trades, and not always have this rosy outlook. Always remember that stocks go multiple ways. We are in a kangaroo market, and this is going to keep going up and down. We're in a kangaroo bear market. Like, a kangaroo and a bear are best friends, or they got married and they're hopping down together.
Mm-hmm.
That's the way I see it.
Or there's a little cub inside the kangaroo.
Oh, hybrid. I could definitely see that in Straya. I think Straya has the most unique animals.
Australia also has the lowest COVID cases in the world.
I can see that. Also, Taiwan, dude. Taiwan hasn't seen a case in 200 days.
Yep.
200 days.
Taiwan is also the size of like this in a map.
Yeah, that's true. That's true. I do like Taiwan, though. I do like Taiwan.
Tomorrow we're looking at Exxon. You know who else is reporting? Chevron. And
Under Armour. Yeah, no, it's not gonna happen.
You know who's long Under Armour is Kyle. He just texted.
Really?
Yep, he's bullish on Under Armour.
Interesting. Colgate.
We'll see.
Colgate. Charter Communications.
Since Google did well,
You know what? You know what's a really good short candidate? RUTH.
I've been to Ruth Chris once.
Overhyped. I don't like it.
All right, it wasn't all that. It was all right.
I don't like Ruth Chris. I'm not a big fan of steakhouses. I'm not a big fan of steakhouses. The reason why, right? The reason why steakhouses are not good is because I pride myself in my meat making skills. Like I pride myself in the way that I cook steaks. So I could easily make a legit dinner for a fraction of what you're going to pay at the steakhouses. Right. Also, you only really go to steakhouses on a quote unquote first date, and we all know I only take them to McDonald's.
We already established that. You move your way up. Next day is Chili's.
Next day is Chili's. Next day, I'm gonna do a dating restaurant trajectory because I feel like that should be a thing, right? Like on first to second date, maybe fast food, maybe share a pizza the next day. But Ruth Chris, that's an anniversary date.
In a pandemic, who's? I mean, who knows? They might say they had a terrible earnings and stocks go up.
And I think the reopening outlook may be one of those things where it could, it could have investors say that, oh, you know what, let's pour some money into Ruth Chris because they're probably going to reopen pretty soon. And I don't know, dude, why is there so many more cases now? 80,000 cases, dude.
A day.
80 a day. In the
You know what? Going back to COVID cases, DraftKings and Penn Gaming, PENN, had great earnings. They were up, I think, almost 8-9%, and then took a dump. The reason being because a Giants player, was it a Giants player?
Yeah.
Tested,
some Texans, I
forgot the name. I don't think they mentioned the name. They just said a Giants player.
Yeah, a Giants player, yeah.
That sucks when they say on the headlines, a Giants player, right? A Giants player tested positive, and they don't even name you because you're a no-name.
or what if they forgot the S and just a giant player? Or like somebody who's you.
That's shameful. At least name the person,
right.
You're already embarrassing the person. Like that sucks.
Dude, speaking of sports and COVID, did you see what happened in the World Series?
No, all I know is that Magic Johnson has a ring as a player, as an owner for the Lakers, the Sparks, and the Dodgers.
You know who's really the Teflon Don? Not Teflon John. We know that you're Teflon John. The Teflon Don. The person who is just super immune to everything.
Yeah.
Is Magic Johnson.
Magic.
That guy single-handedly beat AIDS.
Yeah, 30 years ago.
He's beaten AIDS. He said, you know what? AIDS, that's nothing to me. I could dip it anywhere I want to and still get it and not get sick. That's
oh my God, TMI.
No. So back to the World Series, right? So there's this player from the Dodgers, Justin something, and congratulations to the Doyers, by the way. I think you guys it's a long time coming. You guys deserve it. But this guy, right? So I guess for some reason they tested pretty late. They had results on the second inning, and it was inconclusive. So they retested. The test comes back positive. They pull this guy in the 8th inning. They pull him in the 8th inning, secluded him in the clubhouse away from after he's already been exposed to all the players. They win. He comes out of the clubhouse, kisses his wife in the mouth, and sat next to one of the executives for the team who is immunocompromised because he had cancer.
What a world. What a world. What a time to be alive.
Oh man, that's a nightmare scenario for me.
What a time to be alive, and it was televised.
It was televised. It was like the optics of it is all wrong. I get it. You want to enjoy it with your team, right? It's a sporting event. You are an athlete. You are built at the top of your game. You are in your prime, right? And if there's anybody that can beat this, is you, because Magic Johnson is a superior athlete and he's beaten everything.
Yep.
But for him just to come out there and just, I don't know, dude, the optics look bad. It looks bad. It just looks really weird. Final trades for the week, buddy.
Well, I just want to let everyone know the market from its previous high is currently down 10%. So you know what that means? Your 401k is most likely down. Okay. Well, if you just started today, your 401k is already down.
It basically is just a 4K now, not even the 401 anymore. It's just down to a 4K.
If you bought stocks 3 weeks ago, like let's say if you started a position in Apple or any of the big five, Google, Amazon, whatever, most likely your account is down 10, 15%.
It is now a rotten apple.
Minimum. Okay. But don't be scared, in all honesty, because all the good news are starting to come out. There's only going to be a recovery process. And if you're in it for the long term, don't get shaken out. Period.
Trust the process. The process. And if you have rules and you have, you have your own trading guidelines that you abide by on a day in and day out basis, trust them. Because again, loss aversion's a real thing. And I mean, especially if you're in shares and not in YOLO options, expect it to go your way, really, to be honest with you. Because I mean, you will, eventually go back up. I mean, stocks do go up in the long term. In the long term, but in the short term, yeah, be prepared for a little bit of pain. But it's not like you wake up every morning and say, "This is the move I'm going to make." It's if you're a long term investor, that's what you do. You just keep on holding.
Yeah. So my play for tomorrow, Peloton. I'm gonna short that again. It already came down. My first target is 112 from I think 121. So coming into fruition. The chart itself is coming down, but they're reporting earnings I think next week. I'm still
that's overbought, dude.
Yeah. Oh yeah, dude. Like shout out to the ones who bought a bike. Yeah, it's overbought right now, and I think their prices are way too steep. Oil, we're going to take a look at oil tomorrow. We're completely bearish on Exxon and Chevron because oil itself it's a dying commodity, I just don't believe in it personally. That's just my opinion. But yeah, that's it. I'm super excited for this weekend.
Yes. Yes.
Special guests. Yes, we're shouting you out right now so you don't bail. And I have a special stock of the week.
Stock of the week, dude. It's stock of the week. We've gotten a lot of reviews from stock of the week. I like that.
A lot of folks loved it, and they hit me up. They texted me. They messaged me on the Discord and on Instagram. They said, "Hey, I didn't know that company did this, did that." I got another surprise for you guys.
Can we get a teaser? Like, give us a sector, not the stock itself, but give us the sector.
They used to give out all of the samples.
Ooh.
Go there.
Like music samples?
It don't matter. I'm not going to tell you. You just go there for the sample.
Okay. Stock of the week on Sunday. So this episode is going to be on Sunday. Our special guest can only join us on Sunday. So that's what we're going to be doing. We are super excited for him to come on. Again, we've been trying for the longest, my guy. And we're super excited to have him on. I think what we're going to do is have him actually join for the whole episode, dude.
Yeah.
Right?
It'll be fun,
right? Our first ever third person.
A threesome.
A threesome.
You know what? A lot of people say, "What the heck is trading daddies?" Because first of all, I was talking to a neighbor. We'll cut it short right here. They said, "What the heck is a trading daddies? Like, is that something explicit?"
Well, now it is.
And I
It's
said, "Come on, man! Like, get your head out of the gutter." All right, I'm out.
All right, guys. Well, thank you guys very much. We totally appreciate everything, and each and every one of you guys for listening on a day in and day out basis. TradingDaddies.com is where you will find all the info on us. I mean, these are swagalicious. You see, all the episodes are there. All the videos you can definitely see. We have our bios up there. You can connect with us through there. You can follow John at John C Trades. You can follow me at Diz McGee on Instagram. Follow the Trading Daddies Instagram page too, and we'll link that all in the comment section. Oh, in the description section below. If you guys have any questions, concerns, feel free to hit us up. We're more than willing to connect with you guys. And again, we shall see you guys this weekend. Peace.
Out.